Hello, welcome to the Humble Investor Bull Bear Market Report for April 9th of 2018. My name is Adam Straseske, and here is our agenda. We'll always cover the broad market readings first, and then we're going to get into the nitty-gritty of this week's operating plan. As far as bull or bear market territory, we're still in a risk-on stance simply because the MSCI All World and S&P 500 are outpacing Treasuries represented by this red dotted line down here. So until we get below this line, we're still in a longer term risk-on stance or in a bull market. That's how we're measuring whether or not we're in a bull or a bear market. As far as correction risk, yes, we're still in correction risk. We've been going sideways now for a few months, and the longer that this thing goes sideways, the more chance that it has to break to the bottom, or at least get to a 50-50% chance. So whenever they bounce around like this and you can't get any push to the upside, you have to think to yourself, okay, if it can't go up, then it's got to go down. And so that's what we're testing right here. We've got support right in the 25-50 range, and that's really the level to watch to see if it breaks below there. And on a weekly, a close below there would be really good for the bears if they did get a close below that level. The breadth is really not telling us too much. It's basically in line with price. There are no divergences or reversal signals, positive or negative, and so the breadth is not really telling us too much right now. Look at the weekly chart. We look at the weekly chart of the S&P 500. And you can see the week before last, this bull bar, this is an inside bull bar, and it's a buy signal. All the bulls had to do was get above that 2675 level to get a buy trigger, and they just couldn't do it. So we had a bear bar last week. We traded below support at this level, and the good thing for the bulls is that the bears could not close below that level. So if we close below there, it'd be pretty bearish on the S&P 500. It's more of a neutral stance right now because of the trading range. We still do have support down here. If in fact it does break to the downside, we've got a measured move target of about 2460, 2461, right in that range, which makes sense too because that's about where the S&P 500 broke out on this last bull leg. So you can see we had this nice bull leg here. This is this line, this green line is where it broke out, and that's right about where that measured move is. The measured move is simply the distance from here to here, and then we take the distance from here over there. So we just measure the distance of this, we put it on top of here, and then it goes down to about 2460. So we'll see if this can hold. If not, then we'll be looking for support in the 2460 range. And here's our operating plan for this week. Still like preferreds, even though they're getting beat up pretty bad right now. And our weekly swings. Here's the look at the U.S. large caps and U.S. growth. You can see right here I've got the trading range clearly defined right here, and the bull channel. Looks like we're starting to break through that bull channel, and so we'll see if it can hold. Not good for them that they couldn't hold it above there. So again, we'll see if they can hold. If not, then we're going to look for further downside action. Oil down 4.3% for the week. This is precisely what we were worried about as a possible double top. Looks like the bears have that in. And if we don't get any upside action here pretty soon, then we'll look at taking some profits off of the table. And at the very least, we have a stop out point down here. U.S. Treasuries down 0.36% for the week. And not good for the bulls that we didn't have much follow through. Really would have liked to see another large bull bar to racing to the upside and would have built the bull case. Right now, this is just another possible bear flag. So if this in fact does break to the downside, then more than likely we will hit our stop. The vehicle that we trade is still within the trading range. And so if it does break below this point, then we're going to look at getting out. Australia up 0.59% for the week. We've got two legs down. we've got our measured move, 21.5. Didn't quite get there, but we did get a buy signal. If we can get that trigger to the upside, that will be good for the bulls, and we've got our second purchase range down in here, so still lots of room to move around. Brazil down 2.3% for the week. Doesn't look good too good for Brazil right here, but we still are within the bull channel, and so if we can just get some positive market action, then Brazil could certainly be one of the leaders because it is so close to making a new high right here. If we can just break out to the upside and continue that advance, of course that would be good for the bulls. The EAFE, MSCI EAFE Value Index, up 0.92% for the week, our best performing index. We've got a second purchase range down in here and then an initial stop here. So nice buy signal here, and then we got the trigger. Good that it closed close to the high for the week. So we'll see if that can hold. And that's it. So we don't have any new monthly trender positions to add on to. No new weekly swings and no weekly scalps. We saw very, very few buy signals, and we'd like to see it the other way around. We see lots of buy signals, and frankly, we just didn't see that many of them. And with that, you have a great week, and we'll talk to you next time.